Major investments into green energy by oil majors BP and Shell may be the latest fossil fuel fad, but not every supermajor is as eager to make the shift to green energy. Energy majors BP and Shell are taking pains to cut their oil production to focus their funds on renewable energy investments. But the biggest oil producer on the planet seems to be investing its dollars into increasing its oil production. Saudi Aramco seems focused on the day when oil demand returns after the pandemic, and it has concrete plans to increase its capacity to another 1 million barrels of oil per day to 13 million barrels daily. But BP's annual energy outlook, published in September, is calling for oil consumption to peak this decade, largely because of the shift in green energy policies throughout the world. To ready itself for the new green world, BP has plans to cut its oil output by 40% between now and 2030. It also has plans to spend $5 billion per year on low-carbon projects. Royal Dutch Shell also has plans to adapt to a more climate-friendly future, with multiple solar, wind, and energy storage projects on the horizon. Project Reshape, as Shell calls it, also includes plans to cut between 30 and 40% off its oil and gas production costs so it can free up cash to better focus on renewables. Ultimately, Shell plans to become a net zero emitter by 2050 or before. But Saudi Aramco has vowed to be the last man standing in the fossil fuel industry, and the oil giant is looking to pump out every last barrel of oil from its massive reserves, despite the world's push for less carbon-intensive energy, citing the realities of consumption.